Welcome to The Business Strategist, the show for CEOs and founders ready to scale fast, lead smarter, and build a business that doesn't rely on them. I'm Adam Strong, award-winning strategist, former elite athlete, international speaker, and 3 times best-selling author. After 3 decades in business, I know exactly what it takes to grow, scale, and exit with impact. Each week, I dive into real conversations with industry experts, bold entrepreneurs, and clients navigating the uphill struggles of business, giving you the tools and the strategies to create more profit, more freedom, and more impact. Let's get into it. Imagine spending 15 years building a business and discovering it was only worth a fraction that you thought it was. Not because it was a bad business, but because you never followed the rules of the stage that you were actually in. Now, today's guest found that out. He fixed it and he increased his valuation by 10x in just 3 years. And now, instead of retiring, went on to buy a welding company, but that's a different story altogether. Now, we have in the house Matt Pohl, and he's here to tell you why most founders are playing a game they don't even know has levels. And so Matt is a founder of the ReWild Group. He's the author of 16 plus books, sitting on 30 years of research across 1,500 businesses. And he also acquired the intellectual property behind the Stages of Growth methodology, which was written by a guy called James Fisher, and he's expanded it into what he calls the organizational rewilding. And now he also certifies advisors globally and delivers it, which is absolutely amazing. And he treats his framework like a living ecosystem to find out what's missing, put it back, and basically watch everything shift. So without further ado, Matt, welcome to the show.
Hey, Adam. Thanks for having me on.
Good stuff. It's really interesting. I love talking to you behind the scenes because it seems that you've got a lot of experience, but you've had a lot of not called rude awakening. Well, I suppose it was a rude awakening, and when you went to exit your business. But I want to kind of jump in, if I may, because take me back to that point, which I can't remember how, I think it was around 12 years ago, but to the point where you found out that the valuation of your company was worth a fraction of what you thought it was. And what did you act like from an emotional perspective? Forget the logic, but emotionally, how did you feel at that point in time?
Yeah, well, this was the first business that I had founded and was operating. So I think that's how most of us SMEs are. We have a passion. We think we're good at something. We're going to go do it better than the last guy did. So that was kind of my mode of thinking. And, 12 years into that, my wife and I are business partners. 12 years into working it hard, taking all the risks, going sometimes months and months and months without taking a salary, all that stuff. Mm-hmm. And to be 12 years into that and have somebody come and value the business. And it was, just under $1 million, which isn't nothing, but, I have 4 kids and, college, all that kind of stuff. Nowhere near what we could retire on. And so I would say the first emotional reaction was, I would say disappointment, but almost a discouragement. Right? To say, why did we do all this? And that's all it's worth. But I would say the second part was, why? Why is it not worth more? It was really this recognition that we hadn't even asked the question about how we build a business that has transferable value. So it was a little bit of I pride myself in being intelligent, able to learn new things. But when you're blindsided by something like that, you really start to question. It's like, okay, what else have I missed along the way? But I guess that's part of it. It was a bit of a rude awakening, but it was so important to happen. Yeah. It's just like things that you experience in life that kind of shake you up. It was a necessary thing to go through, and it turned out a very fortunate thing that it happened.
What was the actual business, if you don't mind me asking?
Yeah, it's kind of a unique niche business. Here in the United States, we have something called class action lawsuits. So these are complex commercial litigation matters, and basically have a large group of people that sues a company because they did something wrong. And so that's considered a class of people that are part of that action.
Yeah.
When those cases settle, there's a process by which you have to give legal notice, answer questions, possibly process claims from the class members, and then distribute benefits. So that's
Yeah.
what we did. We managed class action settlements.
Beautiful. So basically, you're the bridge between the court
Mhm.
and either the claimant or the defendant, I guess, right?
Yeah, exactly. So we work between the parties and the court kind of as this independent third party to effectuate the settlement.
Beautiful. That's very different from what you do today, of course.
Yeah,
But
yeah. That
so tell me, like, and I think I want to bring up a point there because you did say that you felt very disappointed when that valuation did come in. What was going through your mind, at that initial reaction? Was it like, should we just accept it and that's it? Like, what was that going through your mind?
Yeah, I think the the emotional roller coaster was there. And then after you absorb the fact, you're faced with a decision, right? And that's what Don and I had to going back and forth on. We had a good business. It was making good money. And so the question is, do we just ride it out for another 10, 15 years? That was
Mhm.
definitely an option, and it wouldn't have been a bad option.
Mm.
But I tied a little bit back to growing up. My mom and dad had a business, and
Yeah.
when I was just going into high school, the U.S. it was late '70s, early '80s. U.S. was going through a depression or hard economic times, and they ended up losing their business. So they had spent 20 some years working the business, and literally one day they locked the door and walked away from all that. And so in the back of my mind, I was thinking, well, I don't want to be like my dad to, just get to the end, close, put a closed sign on the door and walk away from it. I want to have something that has some value. So when Don and I talked about it, it was like, okay, we can go down path A is just status quo, keep on doing. It's fine. We make good money. The alternative was, well, let's take some risks. Let's do things differently in a different way, and
Mhm.
so we said, let's do that. We're going to work another 10 to 15 years. Let's build something that has transferable value. It's kind of as simple as that. But then the question is, well, okay, we clearly didn't know how to for the first 12 years. Where do we go? What do we do differently? And that was really the pickle we were in.
And then I know that we haven't really got into it, but that's, I guess, how you discovered James Fisher and the stages of growth, right?
Yeah, it turns out that another business owner that we had a professional relationship, and he suggested a book. This book was by James Fisher. It's called Navigating the Growth Curve. And it was kind of an interesting book. It was setting of like a fictional narrative story, but it was teaching these business principles that he had identified through his research. And it turns out that the author of the book lived in Colorado, not too far from me. Yeah, just kind of coincidence. And so we hooked up, and I had him coach me for about a year. And he really connected, the dots more than what the book did it on its own.
Yeah.
But really, the thing that stood out from the book was this idea that businesses go through these different stages of growth. And when businesses are in a stage, there are some best practices, what he called rules of growth. And if you
Mhm.
follow those rules, it makes growth easier.
Yes.
I didn't have any basis to know if it was true or not, but I needed something.
Yes.
And so I started to follow that roadmap, and
Yeah.
that's where we saw tremendous growth.
So basically, you were looking for a solution. You didn't have a solution. You thought, you know what, screw it. I'm just going to go with it. See where it takes us.
Yeah, it was, I say, it was a little bit of blind leap of faith, to be
Yeah.
clear.
Yeah.
Now, the other CEO that had recommended the book had told me this was the most accurate growth roadmap he had seen, and he had grown a very successful engineering business. So I had that as a point of reference, but it was interesting just how quickly things started to change. I could see right away that there were several areas that I was just totally off from what his recommendations were based on his research. And so we changed those, and immediately we saw some growth. And in 3 years after applying the roadmap, we had tripled in revenue. And we had gone from about 8, 10 people up to nearly 40.
Wow.
And what was interesting, I think one of the most powerful things about the roadmap, it not only helps you get unstuck, but it predicts what's coming next. And so you can actually know when you're going to the next stage and get ready for it and transition to those new sets of rules smoothly. And
Yeah.
so, we went from a me centered, a CEO, business owner centered 8-person team to almost 40, multiple managers and supervisors and teams, all within 3 years, with really not really a glitch. We didn't go down any dead ends. We just grew sustainably. And that's really what this roadmap is meant to do.
On reflection of looking back on the past, do
Mhm.
you feel like it was solely the roadmap that was the catalyst that got you to the success of the 10x? Or do you feel like it was actually just one day you just finally woke up and thought, oh my God, like you had this epiphany moment or whatever it is? Or do you think it was kind of a combination of the two?
That's a good question. I don't think we would have seen the growth without the roadmap. So that's
Okay.
maybe one part of that answer, because it wasn't like I wasn't trying to grow the business, but we had been at kind of a revenue ceiling for a decade. So looking back, somebody asked me, well, if you had learned it earlier, do you think it would have had the same impact? I think the answer is yes. It wasn't that we weren't trying to grow for that 10-year period. We just didn't know these hidden barriers to growth, and that's what the roadmap revealed.
It's really interesting. I've come across well, I wouldn't say similar research, but I certainly am very knowledgeable about growth cycles and why
Right.
businesses get stuck. And often it comes back to things like you've got internal and external factors that affects a business and stuff like that. Now, what's really interesting about the stages of growth from how you've created, like the roadmap that you created, is that you measure stages by headcount and not revenue, which is fascinating.
Right.
And most of our listeners, which are founders or small business owners, they think that, I know for a fact that they think that that would be absolutely crazy. Now, you could have, for example, I've had various conversations and they'll say, well, I've got 40 people doing $10 million. Headcount isn't my problem, but margin is.
Yeah.
Why is that wrong?
Well, if you're dealing with a margin problem, that's not a headcount issue, right? Probably not.
Right.
But how you lead and manage and structure that business and the supporting structures you need in the business is not based on 40 million revenue. It is based on 40 people, because a 40 million construction company that has
Yep.
lots of materials and cost of goods sold versus a
Correct.
40 million, I don't know, professional services company. Well, those are two different $40 million businesses, right? Because
Agreed.
one's going to take a lot more people than the other. And so
Yep.
it's really the people that the research found had the highest correlation with, um, well, it's really with complexity within the organization, because it's really the complexity that defines the stages of growth. And
Yeah.
so as you get more complex, the organization needs more structures, needs to be led differently, needs to have different priorities. And
Agreed.
so that's why people are the best determinant of your stage of growth. Revenue isn't bad, but the reason I feel it's used is because it's a pretty easy thing to get. It's more publicly available, and I think it just is natural. But the number of people drives complexity. I think we can see that in any kind of human organization, right? When I was single, my life was pretty simple. I got married, it got more complicated.
Oh,
And
yeah.
when I had 4 kids, it was chaos. And
Yeah.
it was simply adding more people that was the reason for that.
Uh, I guess then my thought process is that, okay, depending on which stage of growth you're at, does that then determine on how quickly you then exit or increase valuation? Or is that what you're kind of saying? Because and the reason why I'm pushing back on this is because I had a fascinating conversation with a wealth management company. Now, obviously, their profit margin should be through the roof because they're professional services. They've got clients under account, etc. What was really fascinating is that they had quite a fairly large team. They only had about well, if it was US dollars, about $1.5 million of turnover, but their profitability margin was almost zero. So I'm just, again, I guess each business is different. And I'm just kind of like thinking to myself, well, they may be at a certain stage of growth, but then clearly the numbers doesn't correlate back to, that's really inhibiting their valuation more than anything else. Because if a private equity firm came along and they're like, oh yeah, I'm interested in buying you, but you're not making any profit,
Yeah.
you're only going to get 1x multiple if you're lucky, So I don't know what your thoughts are about that.
Well, I don't think stage of growth defines your valuation, but it does impact it. And it's really your business model with that company. Their business model and their organizational structure are two areas that I would say are probably misaligned for their particular stage. With the assets under management that firm has, maybe they're overstaffed on the support team, for example. Maybe they're not focused on their most profitable offerings, right? So that's part of looking at your business model. But I would say that businesses that do sell, that I'll put technology maybe on the side because those companies tend to be a little bit different, but more of a traditional business, that once you get to a business that's less owner centric, and in our framework, our roadmap, that starts around stage 3. So 20 or more employees, 20 to 34 employees. That's where a business can start to see higher valuations. Stage 1 and 2, again, more traditional businesses tend to be more owner centric up to that point. And as such, tend to have lower valuations. So yeah, a part of the increase in our business's value was going from stage 1, which was very owner centric, to stage 3 and almost into stage 4, where I had a team of managers that was doing most of the work, and I could be taken out of that business and it could still operate.
Yep. With regards to methodology, how many stages are there? And with regards to each particular stage, what is the pattern correlation as to why a business gets stuck at a particular point?
Yeah. So there's 7 stages. And stage 1, we call it the startup stage. It's 1 to 10 employees.
Okay.
Stage 2 is 11 to 19 employees, and we call that ramp up.
Yep.
Stage 3 is the delegation stage, and that is 20 to 34 employees.
Okay.
Stage 4, 5 to 57 employees, and that's the professional stage. Stage 5 is 58 to 95 employees, and that's called integration.
Very good.
Stage 6 is 96 to 160 employees, and that's called strategic.
Yep.
And then stage 7 is 161 to 350 employees, and that's called visionary. I'll just point out a couple stages there and their names, because I think this answers your question a little bit. In startup and ramp up, the key there is you have to have a business that's generating profitable revenue.
Yes.
If you're not selling a service or can't figure out your business well enough, know what you're offering to what customers, well enough that you can generate sufficient profitable revenue, you'll never get out of stage 1 and 2. So that startup ramp up, that's the most common reason people get stuck there. Stage 3 is the delegation stage. And the challenge here is for an owner, founder to move from owner centric to being enterprise centric. It's called delegation because the organization has so much complexity. One person can't oversee everything anymore. They have to start delegating authority and responsibility through a management team. So that's the start of a management team.
So that's similar to kind of pivoting from, say, a lifestyle business to a performance-based business, right?
Yeah. And you can see there why that stage 3 is important from a valuation, because now you've got a team in place. And if the owner leaves, there's more value there than often in stage 1 and 2. There are exceptions to that, but that's kind of the rule of thumb. And just to kind of go through stage 4 and 5, stage 4 is professional. You got some basic management teams and structure in stage 3. Now in stage 4, professional, you have to professionalize your organization. And that starts with your management team. It may be that the folks that rose up to managers or higher than that grew up through the ranks, and maybe they're good, but some of them might not be professional enough. They may not have the skills to really take the organization to the next level and really set up strong independent departments that have, take care of finance and accounting and marketing and all that kind of stuff. So that's professional stage. And stage 5 is integration, where you need to take those departments from stage 4 and start integrating them into really a working integrated team. And that's where you start to develop a leadership team that oversees managers. So those are some of the things that if you miss those, your business often gets stuck. And oftentimes it's not only gets stuck, it retreats to a prior stage because you cannot sustain where you're at. And so
Yeah.
a lot of businesses, they'll see growth. They can't quite figure it out. What has changed? It was working well before. The rule changed underneath their feet and they don't even know it. And then they wonder why, well, if we get back to 30 employees, it feels a lot better than 40. And I don't know why.
That's interesting. It's like you either move forwards or you move backwards. There's not really kind of in between, which is kind of interesting.
Yeah, it's very hard to just stay. Now, there are some places like in stage 2, it's not uncommon to get stuck around 15, 18 employees, and you just kind of hang out there for a decade.
I always found that certain parts, and normally, from my perspective, normally it's around kind of a set revenue that normally a business would hit, and then suddenly they get stuck in what I call a cycle, where it's a bit like chasing your own tail. You're trying to figure out how to get to the next stage, but it never comes and you just stay there. You just plateau. Does that make sense?
Yeah, absolutely. And the reason they're stuck is because they're not following the rules of growth. If they would align with the rules of growth, and those can be structures or principles or just, we call them non-negotiable rules. They haven't taken care of the graduation requirements to get to the next stage. So that's why growth gets stalled there.
I suppose as a business grows, I always found that it's kind of a fine balance between confidence versus being caution, because every stage of the business changes all the time, right? It's intermittent, it's changing all the time.
Right.
And it's kind of, you have to be very adaptable. So someone that's listening to the podcast today, that's maybe got, say, 25 employees and they feel stuck, what's, say, the one diagnostic question that they should ask themselves to try to get unstuck? Hey guys, I just wanted to take this opportunity to make you aware of a brand new tool that we've just created called the Exit Readiness Assessment. Now, it is for founders and CEOs that are looking to exit from their business operations. Now, it doesn't matter even if you're not looking to exit right now, I would highly recommend to go and take the assessment straight away. It helps you to identify areas in your business that you need to work on to help you towards that exit strategy. And at the end of it, you get a personalized report on some of the areas that you're doing particularly well in and some of the areas that you need to make some improvements to. Make sure you head over to readytoexit.scoreapp.com. That's readytoexit.scoreapp.com. Enjoy.
You bring up this idea of caution and confidence. That's very interesting because that's actually one of the rules that we track by stage. And it's not it's not a one size fits all. And that's why this roadmap's so important because in stage 1, we use a ratio. We say in stage 1, you need 4 times the confidence to caution. So that's a 4-to-1, very confident organization. A stage 1 business can get stuck for just being out of alignment there. Maybe you're a dentist or an engineer, and by trade, just by your personal composition, you tend to be a cautious person. Maybe financial, accountants, those kind of mindsets often gear, or lend themselves to being cautious people. And their business will never get out of stage 1 just because they're misaligned on that. They need 4 times the confidence as caution. If they don't have that, it's likely that they're going to get stuck in stage 1. Now, stage 2, a little bit less, still highly confident, but a little less so. Stage 3 is interesting. It's the only stage where there's an equal amount of caution and confidence because you're going through this big transition of owner-centric to enterprise-centric. You're growing people into their new roles, and you don't want to throw a lot of change into stage 3. You want to kind of navigate that nicely, smoothly, slowly, because if you blast right through that stage, you often grow to 4, maybe 5, and then you come crashing back down to stage 3 because
So it's kind of like you're trying to settle the ship a little bit, right?
yeah, yeah. And you see this especially in organizations led by, I would call it sales oriented people. People are just good at bringing in business and
Yep.
they know how to bring the top revenue in, but they
Yep.
blow right through stage 3 into stage 4 and maybe beyond. But they haven't built the organization to sustain that revenue, and things, the wheels fall off. And, sometimes those businesses actually totally fail. More often than not, they pull back and they realize something went wrong, but often don't know why.
One thing that intrigues me a lot, and I talk a lot about this on the podcast, which is around psychology. Now, and I know we haven't really spoken about it, but I know that in your book you talk a lot about transition zones, right? Going from
Yeah,
one stage to the other, right?
yeah,
But I know that some founders, they don't necessarily, I don't feel they get stuck because they lack a framework, but they get stuck because of they're trying to figure out the identity shift that's required to get them from stage 1 to stage 2 or stage 3 or whatever it is. How do you get someone to let go of the thing that's holding them, that makes
mm,
them feel significant? Like, how do you help them to shift that? Because their mindset does play an important role, surely,
sure.
in all of these
Yeah.
stages of growth, right?
Well, yeah. And one of the other areas of rules, these best practices we have is called 3 faces of a leader. And
Mm.
this area says how should the CEO, the owner, split their time between visionary, manager, and specialist. And those are kind
Ah.
of self-descriptive. The roadmap shows that in stage 1 and stage 2, the owner tends to be heavy on visionary and heavy on specialist. They're really in the weeds, right? And that's
Mm.
okay. It gives them permission. But when you get to stage 3, it totally shifts. Again, this is why stage 3, you have to kind of go through that a little bit more carefully. In stage 3, it moves to a heavy manager phase. That becomes the bulk of where the CEO has to spend their time is as a manager, growing the people underneath of them. And what we find is that some business owners, some founders, they like being the specialist. They get up to stage 3 and they just want to continue to stay the specialist, but it's not sustainable. And so they'll
Mm.
fall back into stage 2. Their personality is geared towards an owner centric business. And that's
Yeah.
fine. If that's the business they want, we want them to be strong as a stage 2 business. But if they want to continue to sustainably grow, they're going to have to adapt to the rules, the reality of that next stage. Otherwise, it'll be like trying to climb a mountain with your backpack full of rocks. It's just hard.
Yeah, I agree. I mean, listen, climbing up the mountain with the wrong equipment,
Yeah, no fun.
it never turns out to be a great thing, right? By the way,
Yeah.
um, but I love that metaphor. Now I know that we haven't really spoken about it, but before we jump into the coaching part, which is my fun part, by the way, ladies and gents,
Okay.
I just wanted to, again, maybe you could share something with our listeners. What is maybe an exercise or something practical that maybe our listeners can do to try to diagnose where their business actually is versus where they think it is, type of thing? I know that you've got a diagnostics and an assessment tool, which we can talk a little bit about. But is there anything else in terms of like practical exercises that someone could help themselves to kind of help them to evaluate where they're at?
Well, in order to kind of decode where you're at, you need kind of the decoding connection, right? The secret code on
Agreed.
the back of the cereal box. So that's really what our roadmap is. So a lot of this stuff, it's intuitive once you learn it. You see it as common sense once you see it,
Yeah.
but it is not common. And so it's hard for me to say, well, think through your gates of focus. Well, I don't know what that term means and trying to think through that. But I think the most important is simply to get yourself into this mindset of what stage of growth am I in? I think if
Yes.
there was the one thing that every listener should do is know your stage of growth. We've got, I gave the ranges, but we've got a free calculator on our website where you can calculate your stage and you can know it definitively. And there's resources that are stage specific. So it's right sized to where you're at that are available.
Excellent. So, guys, first of all, I hope you were enjoying me and Matt's conversations, because I think that it's quite fascinating to really learn about this stuff, especially if you've been stuck or frustrated in a particular stage for a set amount of time. Listen, there's nothing more frustrating than being stuck in a particular place or a stage, and you know that you're onto something. You're sitting on a gold mine, and you just can't shift the fucking needle. It's nothing more frustrating. But listen, I think Matt really alludes to the importance of a framework. And yes, you
Mhm.
can have psychological shifts. Those things need to happen, of course, but I won't harp on about the importance of having a roadmap. So thanks very much, Matt. I really appreciate that. For you guys, by the way, that's listening in and you're enjoying our conversations, we're going to move into coaching part now. And, this is my favorite section of the podcast, right? So for context, I'm the student. Matt is the teacher, of course. Now, we've already kind of spoken off air about how we're going to kind of move into coaching mode and stuff. But here's the thing that I want you to take on board. Very, very important. Okay. First of all, I want you to imagine that it doesn't matter where you're at with your business. If you're stuck or you're frustrated, or if you have been in the past, I want you to make sure that number one, you're taking notes. Number two, I want you to think, if Matt was coaching you, if he was sitting down with you and sitting next to you on a sofa, what are some of the questions that often would come up with you being in that situation? And hopefully, what we're going to go through right now is going to help trigger some of those questions or that curiosity that you may or may not have. So I guess the next question for you, Matt, is how should we get this started?
Well, if we were working together, where I would start, like I just mentioned, is we need to know your stage of growth because that really frames, it's really the lens through which we look at the business. So,
Yep.
I don't know if you want to take your business. If so, how many employees do you want to say are in
Yeah,
your
listen.
organization?
So we've got a small team, like there's literally me and 4 employees. So we're a small team at the moment.
Okay.
We're doing okay, but we could be doing better, right? So
Right.
where is it? Yeah. So I guess we're kind of stage 1, really, I suppose, in a nutshell.
Yeah.
I feel very
So
inferior, by the way, ladies and gentlemen. Sorry.
it's, there are far more stage one businesses than all the other stages combined. So
Okay,
this is,
good. Okay, phew.
it's a very natural part of really how businesses work, how economies work. So there's nothing to
Yeah.
be discouraged. And sometimes people say, startup, man, I'm not a startup. I've been in business for many years. And
Mm.
I understand that. We call stage one the startup stage because of the nature of it, how it
Got it.
acts. And so it's still kind of chaotic. You have a lot of generalists because you don't have enough people to have specialization. It's just the nature of that kind
Yeah.
of chaotic, flexible, turn on a dime kind of a organization.
Got it. Got it. Now, I know that we talked a little bit about off air, which was the gates of focus,
Mhm.
which fascinates me. Can you explain what you mean by that and how that kind of would apply to someone like myself?
Yeah, and maybe since you talked about the confidence and caution, we can use that as a second point to touch on. But
Absolutely.
what we would do is we would start off just talking about the idea of gates of focus. So there are 8 dimensions. We call them dimensions. They're kind of a way to look at a business, kind of like a facet on a gem, right? Each facet doesn't tell you the whole story, but when you put them all together, you have a nice comprehensive view of what's going on.
So is this like a 360 kind of perspective? Is that what you're saying?
If you want to think of it that way, that's a good visual. Yeah. So
Okay,
this
cool.
dimension, this particular dimension is called gates of focus. And the idea is that you can grow your business by focusing on one of three things. That's people, process, and profit. So people, process, profit.
Yep.
And the question is, where's growth going to come? And the answer is, well, it's behind one of these three gates. These gates are always important, right? You need profit, you need process, you need people, right? That there's no argument that they're always important. But the analogy I use is when you have multiple children, you're the parent, you love them all, right? But some may take more of your attention at a particular stage than others. And that's how these work. So in stage one, I'm not going to give you the answer, but I'm going to ask you the question.
Okay.
If you look at what you focus on as a leader, where your organization puts effort, is it, and when you think of like where you're spending money and time, are you focused on your people, making sure they're well paid and compensated? They have benefits as much as you can afford. Is it, oh, I want my processes to be in place so everything runs smooth, we have standard operating procedures, or I want to make sure we're growing the top line and that it's profitable and I'm watching every penny I spend. Of those three kind of mentalities, what do you think you would place as the thing you do the most regularly? What thing you prioritize?
It's a very good question. And it's not a straight answer, but it's a combination. I would say from me, from my perspective, I think I would probably, if I was to put them in some sort of ranking order, if I may.
Yes. Yeah, that's what I need you to do.
Yeah. So I think profitability would be one. I'm kind of torn between people and processes.
Okay.
So yeah, it's interesting. I think, yeah, I'm torn between those two. And I'll tell you why I'm torn, because obviously, if you create more processes, then you can make the people's jobs much easier and more efficient, right?
Right, right.
Uh, but then if we have more people, then obviously we've then got increased capacity. So it's kind of, and that's the reason why I kind of shared that analogy with you. So
Mhm.
it's a balancing act between those two.
If you had to, though, rank them one through three. Go ahead and just go with your gut.
Okay, my gut would be profit would be number one. Number two would probably be process, and number three would be people.
Okay. Okay. So
Yeah.
now you have ranked your three gates of focus. And we have some better written questions that will help you get maybe a little bit more honest, more. It asks the question multiple ways so that you can kind of reveal what that prioritization is. But we've got your ranking. So in stage one, the proper ranking is profit, people, process.
Okay. Yep.
So profit has to be number one because you can never grow out of stage one unless you find a way to sell services and products that make a profit. If you can't figure that out, you'll never have the capital to grow. So
Makes
that's why
sense.
profit is number one. Number two is people, because every person on your team makes up a significant part of the entire organization. And you have to make sure you're hiring for fit. And you typically are hiring generalists, because those people have to wear multiple hats because you're on this small team. And there's a lot of stuff that needs to get done. You can't have anybody that just says, I only do one thing, right? Kind of a thing.
That
So
makes sense.
profit, people, and then process is third, because especially for a newer startup, they're still trying to figure out what's up and down, right? What products and services are we selling? Well, we're still trying to work through those things. And so if you spend a lot of time on process, it's likely that that's going to be obsolete in the near future.
Yeah.
So that's the ranking. Now, interesting enough, in stage two, your prioritization matches the stage two, which is profit first, then process, because you've got so many more people, you need to spend more energy on process, and finally people. And
Okay.
some people will argue against me and say, well, how can people be third? And I said,
Mhm.
remember the three children? You love them all. I'm not
Yeah.
saying you don't take care of your people, but growth is not going to be created by paying your people more, giving them better
Yeah.
benefits, giving them more time off, you're not going to get growth there. You have to focus on profit. Eventually, you'll be able to focus more on people. In stage 3, people is number 1. But in stage 2, profit is number 1, as is in stage 1. And while you're actually better aligned than I was, when I looked at my business at year 12, I was process, people, profit.
Okay.
Okay. And you might say, well, Matt, how could you possibly put process up on top? Well, this is what we find a lot, is that whatever our natural bend is, our areas of strength, it's just natural as humans that we're going to put more energy and spend more time on that. Well, I'm a data scientist. I like process. So I love process. I like systems. So I've built the best mousetrap. And then I thought, well, if I have good people, they'll help me succeed and profit will just come. I'll build it and they will come.
That's
And
interesting.
I did that for 12 years. I couldn't
Wow.
figure that out. I didn't figure that out on my own. Now, you and many others listening to this would be like, well, that's obvious, Matt. Okay, that's fine. That was a hidden barrier for me. That's not an area that's holding you back. There might be other areas that are holding you back in these rule sets, these best practices that are causing you to get stuck. So that was just one of the key things for me, was saying, I got to put my energy primarily on driving profitable revenue. And so we turned our team that was used to handling client work. Anytime that they weren't billable on a client project, we turned them external and said, go make calls, go add people to our CRM, get more emails out, send out postcards, all this other stuff. And we went from 2 proposals a month to 20 proposals a month.
It sounds so obvious, Matt. It really does sound so obvious. Like the way that we're talking, it sounds so damn obvious, but it's not as simple as that, because it's kind of like when you're working in the trenches, and it's not like most of us are stupid, because if we were like we're all smart people, we're all intelligent, right?
Yes.
But it's just like you kind of like lack of self-awareness, where it's like, oh my God, like that's so obvious. Do you see what I'm saying?
It is. And that's one of the reasons I like the roadmap when I applied it to my own business. It was like, like you said, I'm intelligent. I did well in school, all those credentials, but I couldn't figure it out. But once I saw it, it was actually pretty easy for me to say, oh, okay, I know what I need to change. And what was powerful, and I think this is one of the key points here, is that even after I got aligned in stage 1 to the rules and put profit on first, when I got up to 11 employees, I knew I needed more process. People went down to 3rd. I could transition mentally to that new reality and those new rule sets. And then when I got up to 20 employees, I didn't just keep on doing what was working. I knew that I had a big shift. People became first, then profit and process. I knew to transition that again. And then as we were approaching stage 4 is process is number 1. I went back to building up more process. It's really not just seeing where you are. We call that kind of the diagnosing, right? It diagnoses where you are. It prescribed what I needed to change, but it then predicted what came next. And it's really that predictability that allows growth to sustain, because instead of walking into a room I've never been in with the lights off and trying to fumble around to navigate it, I got to stage 3. I turned the lights on and I knew the contours of stage 3. I wasn't tripping over the furniture. I knew where the landmines were and I could navigate it and keep on growing without getting stuck again.
It's really interesting, because I mean, week in, week out, I have calls with founders and CEOs, that are stuck. And
Yeah.
believe it or not, it's really interesting, the gates of focus that you're talking about. And it's just interesting how so many people just get just that small part that you alluded to as incorrect or wrong, because their belief system is that I should focus on this, but actually, no.
Yeah, I see, for example, engineers like me, they're process minded. They focus
Yeah,
on process. They never get out of stage one.
yeah.
Or people focus CEOs, right? They're big on
Mm.
people. They're going to invest in their people, but they never create a business model that's generating profitable revenue to sustain those people that they want to help so much. So again, it's often our natural bend that leads us down a path that's not necessarily right for our current stage. It could be correct in a stage, but maybe it's not in our current stage.
And for you guys that are listening in, by the way, just wanted to point something out here is that it's not your fault. I just wanted to say
Yeah.
that
Yeah.
it's like it's all based on, like Matt has alluded to himself, like as a data scientist, like it's your personality, it's a combination of your experience and whatever it is. Um, Only because I'm fascinated about how people are wired, because you're very left brain data science orientated, that would make sense to
Mhm.
why you did it that way. Whereas we might have someone else here that's listening in that find it very difficult to focus, right? Because they're what I call shiny penny syndrome people,
Right.
and they might be focusing on people, for example, and not on profit. So I think it's a really good, just that small exercise. I think was really really valuable. So thank you. I really appreciate that.
Yeah, no, I think that's very tangible. And just quick, you would talk about caution and confidence. I would just
Yes.
ask, maybe that's another rule. We call that the builder protector ratio. How many builders do you have, or what's your builder mindset within the organization? Because builders are like the gas pedal, and then protectors are like the brake pedal. They're caution, let's not try anything too new, too crazy here. Um, I'm curious how you would compare those two in your organization, in just kind of as a mindset. Are you very confident we're going to go conquer the world, or are you a little more tap the brakes?
Do you know what? I am I'm probably more of a go-getter. So I'm more of a kind of a risk taker, I'll be honest with you.
Okay.
Uh, Unlike my wife, of course, who's completely the polar opposite.
Yeah.
So yeah, so I would say that I'm definitely, which actually in a nutshell, I would probably say the majority of the time it's, it's been okay, but there probably would be times of my life of growing a business where I thought, you know what, maybe I should have exercised with caution on this part before taking
Just
an act. Do you see what I mean? Yeah, just a smidge, but you get what I'm saying, right?
yeah. How about the rest of your team? Do you think they're as confident and builder oriented as you are?
Do you know, it's a good point. I think that with regards to my team, I think that they share a very similar mindset. Probably not the right way, but when I say shares, it's not that they completely agree with everything that I say, of course, because I like pushback.
Yeah.
However, I would say that they are fairly similar in terms of like the way they take risks and the way that they take more of an ownership, an ownership kind of, what's the word I was looking for? Step forward type of
Yeah. Kind of a mindset.
personality. Yeah,
Yeah.
exactly.
Yeah.
Exactly. So an ownership mindset, which is a good thing. But again, so I would say they're fairly similar.
Well, good. So I would say on those two dimensions, you're not horribly misaligned. Like I said, I was more misaligned than you were. And I'll give you just a quick anecdote.
Sure.
I'm naturally a builder. I like to create things.
Oh, wow.
And so I'm a very, I'll take risks. Although to be honest, my wife is even more of a risk taker than me. But so we were very much in a builder mindset.
Yes.
But in one of these transitions back and forth between one and two, we had to lay off some employees.
Okay.
And that can impact your psyche, right? It did ours. We
Yeah.
became much more cautious. We were naturally more confident, but having to let people off and, making those decisions and in our minds failing them caused us to kind of pull back into our shell. We were cautious after that. And so this was another area where the the roadmap said, "Okay, Matt, you got to turn your confidence back on. You're never going to get out of stage one if you're not confident." And the team was looking at me to have that confidence, right? And so as a leader and as an organization, we had to get more confident. And so there's ways to do that. But again, if you don't have that confidence and you lead a stage one business, if you're cautious by nature, it's very difficult to get out of stage one.
Yeah. Love that. Some very good stuff. Yeah, this has been quite fascinating, actually. I always love doing these coaching sessions, Matt, because I
Yeah, that's
always
great.
learn something myself. Even our listeners love this because I get so many great messages from people around the world. So thank you for that. Really appreciate
Yeah, my pleasure. I think that's a great format because it takes the ideas and just makes them really relevant.
Definitely. For you guys that have been listening in, I hope, first of all, you've been taking notes ferociously like I have. Of course you have. But secondly, do yourself a favor, read, if you listen to this episode and there's been some ideas, or you feel like, if you are at a particular stage in your business where you are stuck or you are frustrated, what I would recommend, pause this episode, go back, and if there's something that sparked curiosity or intrigue, go back and re-listen to that, because I can guarantee you will pick up and you will learn new things. I always do in every podcast. So that's my recommendation. Anyway, we're coming towards the end. First of all, Matt, I want to say thank you so much for being here on the podcast. It's been a great jam, hasn't it?
Yeah, no, this is great. It's so fun, and post COVID that we have conversations around the globe like I don't think we had before. So it's wonderful that technology allows us to do this.
Absolutely. And for you guys listening, by the way, just to wrap up, do me a favor. Please head over to the show description notes, which are below. You can connect with Matt over on social media, including LinkedIn, of course. And he had mentioned a couple of tools as well. There's a diagnostics and a calculator that you can go and have a play with as well. That way you can kind of get a bit of an idea about where you're at in terms of your stage in your business, which I think is a great diagnostics tool. So make sure you head over to there. And if you do reach out to Matt, do mention the podcast, of course, and he'll put 2 and 2 together. So anyway, from me and Matt, thank you so much for listening in. And hopefully we'll see you again up on the Business Strategist. Take care. We'll speak to you soon. Cheers.
Bye now.